Hello everyone, thank you for checking in tonight's video. Today is Monday, September 16th, 2013. Let's get right into the SPY guide. As you guys know, this mirrors the S&P 500 index. Let's dive right into it. Last few weeks I've been calling this lower trend line, and that's exactly what happened. We got a nice bounce there, as I called that was major support. I failed to mention it in the actual video, but on the SPX, as you see on the SPY, we didn't quite hit that lower trend line. But if you do look at the XPX, which is the cash index, it did actually hit the lower band of that trend line beautifully, and we did get a nice bounce back towards that upper. We're actually headed towards that upper band of that big parallel channel. Okay, so we are headed towards there, guys. As you see, this is the accelerated trend line, but you are between these huge. This is the more long term, but yeah, you are the upper. Once again, hitting that. About to hit the upper range of the that trend line on this major index right now. Okay, guys. So look after that. Look out for that. I mean, if you guys notice, also we made a newer high on the SPY, but on the XPX, we did not quite get there. So this could be a potential reversal zone. I mean, there is also a catalyst. As you guys know, the FOMC meeting is Tuesday and Wednesday, so the traders will have to be on their toes for that. Okay, it's kind of a weak showing here. You had a nice gap up, and since the the opening market, it just faded pretty much throughout the day. Made another advance, made a lower high, so we tried to break it out. And whenever you see a lower high made after a gap up, that's weakness. So you have to think right now we're below the on the 10-minute chart, guys. So this is intraday basis. You try to break it down to smaller time frame. Right now we're below the 20 and 50-day moving averages. I'm sorry, the 50 moving average on a 10-minute chart. So when you're below moving average like that, you like to think you're on a weaker. I have a weaker to lower prices bias on the market. Right now, your only spot really to look for are these major levels. Right now, I'm seeing on an intraday basis. If you're a scalp trader, day trader, this gap fill will be beautiful. Beautiful gap fill with a 200-day moving average. So any gap or any drop to this level here, guys, I'll call it right now at the 169.30 area, 32 and 33, 30-ish area in this general vicinity. I'll draw it in with my some charts here, some trend lines. Anywhere in this vicinity, that's your day trade right there, or scalp trade. 200-day moving average gap fill, pierce of that probably anywhere in this range. That's your money shot right there for a scalp trade. Okay. That's going to be a beautiful setup. I'm waiting for that tomorrow. But if we do gap below it, all bets are off. Okay, guys? If you gap below it tomorrow, that's going to be resistance. Okay, guys? So let's go on the hour chart. Still, I mentioned that once we start riding this, on 50 and 20-day moving average, we can continue the trend up, and that's pretty much the right call. I did say that last video that we were in the midst of a breakout here, guys. I could call that out as well, and sure enough, boom. This is a major trend line. You got to respect it, and sure enough, you got a nice bounce off this trend line support after a major trend line. Okay, guys. So, next few days will be important. It could be the catalyst for something big. Is the Fed gonna start tapering on their asset purchasing program? So we have to really watch out for that. It's gonna be very important. So right now, I'm just waiting for that and see how the market reacts. Okay, so right now, market's still holding up decently, but relatively a little bit of weakness too. So I have a little bit of neutral bias because of what's going on the next 2 days. But sure enough, very easy analysis. You try to break out here, never close above it. You see that on intraday basis as well. As you can see, we kind of held this trend line here. This is the breakdown before, so we kind of recaptured that trend line. So you got to think that's a small sign of strength. So that's why I'm in a neutral basis, right? Neutral bias right now, as we did gap and holding for now. Now, if we just continue to make a base here, like we did here, that's a big different story. If we make a base here, and then it's proven to us that it wants to go higher. But right now, it's the first gap up of the candle of the gap up, so we have to wait and see how it reacts here. Okay, guys. I'll just go to intraday basis really quick and show you that trend line. Once again, really quick. So this is the gap up, gapped above the previous 52-week high, failed to close above it on the 10-minute chart. Tried to retest it and failed. So now we're seeing lower. So on a very micro sense, we are making a series of lower highs. But once it hits, some major support right here, I think you could get a nice bounce here. So I'm definitely playing that for a day trade. Look after that. Let me go to the daily chart and look after the major levels. On the daily chart, obviously the only really resistance I'm seeing on the upside is this upper trend line. That's all I'm seeing. The measured move does take even higher, but if it does hit this trend line, I'm not going to be going short. I'll be selling bigger call spreads above that level. Okay, guys, that's how I'm going to play it. On the downside, if it hits this into this recent breakout area, 167. I was selling puts below this pivot at 163. Okay, maybe some bullet spreads I'll be selling on the sell side. Open interest on a monthly and weekly puts on the SPY. The max open interest is showing roughly 165. Okay, so you like to think that the institution is going to close the SPY above the 165 just to maximize their gains anywhere in this vicinity. So anywhere selling below this pivot, I believe this week, 163 bull put spreads below this pivot should be safe in my opinion, just based off open interest and based off this major trend line we have here that I called out. But now every time you hit it, it's going to get weaker and weaker. Okay, so we have multiple hits that dictates that it could break at any time on the next fall down there. So we have to be cautious of that as well. All right, guys, let's go to IWM very quickly. And we are looking at, we almost actually filled the gap on the intraday basis on the IWM. So it looks like the IWM is a little bit weaker relative to the SPY. And I always like to look at the small business of America as the leading indicator. So we are a little bit weaker on this IWM as we actually almost filled the gap. But, still uptrending, still above the 200 on the 10-minute chart. Hour chart, you still have an uptrend. So nothing really to ride home about yet. Like I said, it's just going to be off the base, off the FOMC meeting coming up in the next 2 days. Okay, guys, so keep the powder dry and just wait for that. Qs obviously a little bit more weak because the Apple, and I'll go over that soon after this chart. Right now still holding above this breakout area, so right now still neutral to positive, more of a neutral bias as I said because of the FOMC, but still holding this consolidation period. But you like to think this is a failed breakout. It looks like you're going to break out here to new highs and reversed. That's always a failed breakout. And pretty decent volume as well. Let's look at Apple really fast. Apple failed to meet my minimum target on the inverse head and shoulders. Fell a little bit shy, but this still is it could be a bullish consolidation pattern. But this is a nice drop into the 50% retracement. And if you extend this inverse, it's still in play. If you connect it out, see how beautiful that is. If you extend it out, retest here. It could be retesting here. See how it found support here, and we close right at it. So it's beautiful how these supports still come to fruition, still come to play, and still hold. If you guys know multiple factors, you got a 50% retracement here. You have this trend line sloping down, 450 even number, and also have some moving averages here, which are minor. But nice pullback here. As I said, this was going to be minor, and we have found minor support here on the 20 and the 50 and the 200-day moving average here. But once again, I thought Apple did need more consolidation. I think it really got ahead of itself, breaking out of the 200s so quickly. I think people just really jumped the gun right there. So I think it needs to consolidate more in this general vicinity if you want to see higher prices. But right now, that is a pretty decent decline on Apple into support right now. Okay, so let's look at. I think someone wanted to look at GGS. I believe it was GSS. I believe. There it goes. Really quickly go over this. And it does look on the weekly chart, it does look like you are into an inside bar pattern. So this is a very, very crucial spot for this stock. Let's see if we ever closed below. Nope, we still are inside that inside bar. So this is a very, very, very important spot here, guys. So this is your reference point. You're right. You want to take a long. It's a very, very good risk reward. I mean, your stop out is so tight. Just notice that you are in a downtrend. Okay, so that's very risky, and penny stocks are always risky in general. So this first support broke. It went to my next level, which is this big wide range bar on big volume. So that's going to be support there. You're going to think people are going to want to defend it here, and your stop is very close. Okay, so the low of this candle is, let me get the exact print number. It is 47 cents. So we are pretty much right in that area. But if we continue to go sideways here, kind of how it did here. If you go on a daily chart, you can see many sideways bars. It was making a base to go lower. So you want to see a bounce, or this could fail and could be headed to my next level, which is the double bottom. And at that point, I'd be very cautious because you are on a downtrend, so it could break that. Okay, guys. So, but those are the levels. Still the same thing on GSS. I believe somebody asked about that, so I did want to go over it very quickly. But it is a nice inside bar pattern. But you like to see these on uptrends. Right now, it is on a downtrend on the weekly chart. Let's look on the daily chart. I believe the daily chart looked like it looked like it was trying to recover, but it failed to hold this these moving averages. So I would have liked it if it bounced here, but it did not. So you have to start looking at these lower pivots, okay, guys. So if you really want to start looking long here, but playing the bottom on these are very risky. It's very, you gotta be very patient. It could take a long time to consolidate here and eventually break out. But right now, just play the levels and play day by day, right? Okay, let's look at Amazon very quickly before I take off. Just want to do a quick update. I haven't done one in a while. So Amazon, not much going there. Trying to recapture these moving averages, but just making a lower high off this. Nice little bounce back, but take a fib. Nothing I like right now. It's just into resistance at the moment. It looks like it's just consolidating. See if you can move these, hold these moving averages. But right now, I'm not seeing much on Amazon. I'm primarily sticking to the SPY when I'm playing right now at the moment. But if I see any setups, I will definitely go over them and alert you guys. But right now, that's all I'm seeing right now as for the moment. Still early in the week, so let's see what happens the next few days. The FOMC meeting is the next 2 days, Tuesday and Wednesday. Let's see if they begin tapering, and that's going to be very important for this market. And I will update you guys if I see anything else. I hope you guys have a great day. Talk to you guys next time.